So, John, you come.
Good morning to each and every one of you. It's a great joy and privilege to introduce two wonderful men that have come to help us to offer practical tips and information on filing our taxes. First of all, we're delighted to have Brother Don Setzer, who's the owner of Don Setzer CPA. His firm specializes in providing income tax, accounting, consultant services to ministers, churches, and Christian organizations. He's been honored to serve on local, state, and national Southern Baptist boards, including 10 years as a trustee for the New Orleans Baptist Theological Seminary. We're delighted to have his wife Kim with us as well, and he's also the father of two children. He enjoys reading and watching college sports. In addition to him, we're delighted to have Lee Wright, who's a state missionary, and he's been with the State Board of Missions since 2003. He's currently serving as the church compensation contractor in the Office of Leader Care. He has earned degrees from Howard Payne University and Southwestern Seminary. Lee and his wife, Lynette, are members of the Central Church in Huntsville. They have two daughters, and we are delighted to have both of them. Would you give them a hand as they come now to share in their own life?
Thank you so much. Thank you. It's good to be here and glad to see everybody. Today, you have a little handout in front of you, and it says tax deferred or Roth here. And so we want to think, that's what we want to think about. So Don is going to talk to you about taxes right now and how you can do your taxes now. I'm going to talk to you about a tax decision that is for now and 30, 50 years from now. And it's what you do with your retirement money. And I think this is an important discussion because I listen to all kinds of talk radio and financial talk and everything like that, and they give you advice about what to do. And it's not necessarily the best advice for a minister. So we're going to talk about that today. So do we have the PowerPoint up? All right, here we go. So the question is, to Roth or not to Roth? Now, I hope you know what I mean by that. Our traditional retirement contributions are tax deferred. That means that I'm saving on taxes right now as I put the money in. And I'm saving on my federal tax and state income tax. And if I'm a minister, I'm also saving on those Social Security taxes. So that's the traditional method to put money into retirement. The Roth method means that I'm going to pay all the taxes now, but in the future, I won't pay taxes then. Now, first of all, I've got a disclaimer, and I am not a financial planner. I'm not giving financial advice. And even if I was, I can't really advise you on this. There's just too many variables. But I do want to give you some good information about what the Roth is all about. And that's my purpose today. So as we think about Roth versus traditional, we think about what it is, and I just kind of explained that. You pay the taxes now, and then when you draw that money out during your retirement years, you won't pay the taxes then. And in fact, one of the good things about retirement is that your retirement money, you won't be paying Social Security taxes on that money as it comes out of your retirement account. We only pay Social Security taxes on money that we earn from working. So if I'm still, I could have several sources of income. One might be working, that I would pay Social Security taxes on. One might be my retirement, I would not pay Social Security taxes on that. One might be Social Security income, and I would not pay Social Security taxes on that. But so that's the way this works, is the Roth means that I'm going to pay the taxes now to not pay the taxes in the future when I draw this money out. Now, a concession for all of your employees who are not ministers, and if they're reasonably young, I'm talking about 30, 40, 50, that's young. And when they're in that kind of age range, the Roth is a great tool. It is a great tool, and I'll show you why in just a little bit. But the Roth is a great tool, and so for your non-ministers, your church should offer the Roth version. Guidestone offers it. All you've got to do is just write that into your plan document. Yes, we do offer the Roth for those who choose it. So you should do that. So, as we think about this, why should I do a Roth? And so we think about a person beginning in their 20s, 30s, 40s, 50s. They might want to do the Roth to save on their taxes because most of your money is going to be growth. Now, this is a chart that Guidestone did a long time ago, and I'm going to use it, and then I'm going to use it in a different purpose. And that is that if I want to accumulate $100,000 for retirement, let me give you a hint. That's not enough money. It's not anywhere near enough money because it would only generate, just in round numbers, about $500 a month if you did that. And that's just not enough. So, and so you could use the 100,000 as a multiplier. If I want to achieve 500,000, here's what I would need to do, and so forth. But if I wanted to achieve $100,000, if I start at age 50, I'm going to need $290 a month. That's a good bit of money. But if I'm going to start at age 30, I only need $44 a month. That's not hardly anything to achieve $100,000. Now, you'll notice that most of that, especially when I'm 30, most is not my contributions. Most of the money is my earnings. This is assuming 8% earnings, which you can do with mutual funds. But you'll see that that person put in $18,000, and the growth of that was $81,000. That's a lot of growth. Now, let's add a zero to it. I would need $440 a month. And if I started at age 30, I could achieve, earning 8% on average, I could achieve $1 million. Now, as I talk to ministers, achieving that doesn't happen real often. But what is the average family income in Alabama these days? And what is it in the Birmingham area? It's over $60,000 average family income. If I just took, say, $50,000, which is less than that, and we just contributed 10% of our money to retirement, which I ought to be doing and ought to be doing more, that would be $5,000 a year, which is about what that is. And I would achieve, if I started at age 30, which I really ought to be starting before then, I would achieve $1 million. So what I'm talking about should not be the exception, it should be more the norm. That's the kind of thing that we should get to. And this person put in $184,000, and it grew by $810,000. Wow, that's a lot of growth. So it shows you why we would want to do the Roth. Had you rather pay taxes on the $184,000, or had you rather pay the taxes on $1 million when you retire? So what could go wrong with the Roth? Why do a Roth? Because I'll save all that tax money during my retirement years. And if I do retirement well, I could have more income during retirement than I have while I'm working. It's possible to do. So what could go wrong with a Roth? Now, this is very, very important. What could go wrong with doing a Roth? If you listen to talk radio, every answer to every question is do a Roth. But is that really true? Well, we need to think through it. Now, if you follow their advice all the way, 100%, all the way through, yeah, they've got good advice. But the average American is way, way, way behind in their retirement savings. The 1/3 of Americans don't have a dime saved for retirement. Wow. Wow. The average Guidestone account is about $160,000. But that's considering 2/3 of people, not 100% of people, because these people do have an account. So we're we're eliminating that group of people who don't have an account at all, that third of people who don't have any money saved for retirement. So most people are woefully inadequately prepared for retirement. They don't have near enough money. So if you're going to have an average income of, say, $60,000 a year, and you're going to enter into retirement, say husband and wife, and you're going to enter into retirement with $35,000 a year, and that's from all sources, Social Security, your retirement, your other sources of income, things like that, you're going to go down to $35,000 a year. Then to do a Roth was a wasted effort, because you can make about $35,000 approximately, that kind of range. You can make about $35,000 a year in retirement and not pay a dime in taxes as a married couple, because of the standard deduction, because of the extra deduction from being over age 65, and some other things. So anyway, it can be a wasted effort if you're not going to have much money in retirement. That would be a waste. So why pay all those taxes now if that's where you're headed? So what could go wrong with a minister? Now, we as ministers have a special privilege. We can put that money in tax deferred, not the Roth. Tax deferred into a church retirement plan, which that's what Guidestone is. And by putting it into a church retirement plan, tax deferred, I'm saving on federal tax, state tax, and Social Security taxes now. I'm saving all that money, which could be, 35% of the money that I'm putting in. I might be saving that much in taxes. Then, when I do retire someday, I can take that money out, whatever's appropriate for me at that time, I can take that money out as a tax-free housing allowance. Wow. That is better than a Roth, because I'm not going to pay the taxes now and I'm not going to pay the taxes then. Now, if I have more money than I need for the housing allowance, yes, I'll pay taxes on that part of the money. But on the money that I have for a housing allowance, that will come to me tax-free during my retirement years. Now, let me say this. You need to do it with Guidestone, a church retirement plan. You can't do that with Merrill Lynch. That's not a church retirement plan. You can't do that with your IRA. That's not a church retirement plan. It's got to be through a church retirement plan. So what could go wrong with a minister is that I could be paying taxes now to do a Roth, and that would be a wasted effort on a whole lot of that money, because of housing allowance. I'm not going to need to pay taxes on that money, and I won't pay taxes on that money someday down the road. So, what taxes will I pay? If I make traditional contributions, I'm not going to pay any taxes whatsoever. And you'll notice under traditional contributions, non-ministers do pay their half of FICA on that. But I'm not going to pay any of those. I'm not going to pay SECA on that. But if I made Roth contributions, I'm paying all three taxes: federal, state, and SECA taxes on that. So it makes it pretty expensive to put your money into a Roth as a minister. Now, actually, you know what the most tax efficient way to put money into a Roth is? Wait until later and then convert it. You convert money from traditional to Roth by paying the tax at that time. So I could convert $10,000 to Roth by paying the taxes at that time. And if I convert it, it's a much more efficient way to convert that money rather than put it in to begin with as a Roth. All right. Are there any reasons, let's say I'm over 50, are there any reasons that I would want to do a Roth? Yeah, there are some reasons. It might be that I put some money into Roth because I want that to go to my kids, and they would not have to pay the taxes on it. Maybe I got an inheritance and I've got some extra money, and this money came to me tax-free. So why turn that tax-free money into taxable money by putting it in the traditional way? Yeah, it would help me save a little bit now, but it might be a good idea to put some of that money into a Roth and not pay tax. I wouldn't be paying taxes later on down the road. Can I convert my money from traditional to Roth? Yes, you can, by paying the taxes. Let me say, and I've been retired 3 years, and I'm still working. I'm still contributing to my retirement account. And so how much money, as a minister, how much money should I convert to Roth or contribute to Roth? I don't have a clue. And even looking backwards, I'm almost 70. And even looking backwards, I have no idea how to figure it. Because when I was in my 50s, I thought about retiring early. And here I am still working. I didn't know I'd do that. Also, we had a goal to pay our house off by the time that we retired. We didn't know for sure if we were going to accomplish that or not. There's so many variables in this that I have no idea how to figure that out. Looking back at it from age 70 and still working, I could have put maybe 25% of my money into Roth. Perhaps, something like that. But I don't know, I don't have a clue how I would have figured that out. But we all do need to know about the Roth. For your other non-minister employees, it's a great idea, and your church should provide it. For your minister employees, if they're a really good saver, they would want to consider some of their money towards Roth contributions and a lot of their money as traditional contributions, because someday they'll use that money for housing allowance during retirement. All right, I'm going to give it over to Don, and thank y'all so much. We're going to have some question and answer time at the end, and so thank y'all so much. Don, here's the clicker.
All right.
All right, thank you.
Thank you.
Thanks for being with us.
Yes, sir. Thank you. I appreciate the opportunity to be here. And the timing is good. It's income tax filing season officially. The IRS began accepting returns a couple of weeks ago. And I read something yesterday that they're already saying to slow down on the electronic filing because they've gotten too many so far. So that's a good way for them to get started, I guess. But we are going to try to cover several areas here in just a few moments in the area of ministerial taxes. And I guess the right era. Okay. The first thing I want to mention is the term dual status. I presume most, if not all of you, are familiar with what that means. But if you don't, as an ordained minister, you have a dual status. You are an employee of the church for federal and state income taxes, but you are self-employed for Social Security tax purposes. So that's the dual status terminology. And you report your compensation on line 1 of your Form 1040. And then the housing allowance is not required to be on the W-2. I had someone tell me the other day, I was just reviewing the numbers before she prepared the W-2, a church up in Virginia, and I didn't know the nature of her experience, and so I said, I'm sure you're probably aware the housing allowance is not required to be on your W-2, but it's optional to be placed in Block 14. You just type housing allowance, $20,000 or however much the church pays the minister. And she responded back, I've completed the W-2. I didn't put the housing information on there because we've never done it that way. And I said, boy, that sounds like a Southern Baptist church. I really thought that was an interesting response. So she did not include it on there, so I said, well, because I'm going to be doing this particular minister's taxes for the first time this year, And so I said, well, if you would, put something on your church letterhead that shows me the amount of that housing allowance where I'd know how to calculate his exemption when we do his return. The major test as to whether or not you're an employee or not there's an old 20 factors test that the IRS uses, but basically it's the degree of control that the church, in this case, has over that person. I get questions every tax season, well, we've got someone that's a part-time child care worker or part-time this, or, you know, they want to do any and everything they can to keep from having to prepare W-2s. They like those 1099s, or even if it's under $600, they don't even have to prepare that. And so I often get questions, well, are they really our employee, and so forth. And so that 20-factor test is still available to take a look at, but the major determination is the degree of control that the church has over that person to make a determination. But an ordained minister is an employee of the church. Okay? Full-time evangelists that receive compensation from different churches, they would be considered self-employed, and they would file Schedule C as part of their individual return. The most advantageous tax benefit to a minister, the housing allowance. We just talked about that. It should be designated in writing and in advance by a church in a business meeting. Why not say in advance? Well, I've had calls, well, we've had this minister on staff and we didn't do anything for the first 8 months as related to breaking out anything related to housing allowance. Can we just say that half of his money? No, you can't do that. You have to have the church vote for it, and it has to be going forward, I guess, prospectively, I guess, but you can't go retroactively to a date in the past. You determine what the housing allowance is, the church votes for it, and then moving forward. As long, and there's IRS language in here we'll look at in a minute as to how you word that church business meeting designation. But you can't go back and say, hey, we want to do something from 6 months ago. It has to be approved for the future. That third bullet, that's each year the determination as to what amount is exempt from federal and state income tax. It's the lesser of your actual expenses, which we have a list in just a moment, the designated housing allowance paid by the church, preferably in a separate check. A lot of churches just write one check and break it down on 2 line items. This is compensation, this is housing allowance. But if you can, if it's feasible to do so, it's better to get 2 separate checks, and that way it's better to be tracked for the housing allowance for the total. So actual expenses, the designated allowance, or the fair rental value of the residence, furnished plus utilities. This has been the law since '02. Our, I guess recently retired pastor out in California, Rick Warren, who wrote The Purpose-Driven Life and a lot of other books. He, if you want to thank him or blame him, he is the person, his court case that went all the way to the U.S. Supreme Court is what prompted this change in the law. He had a $76,000 housing allowance one year, and the IRS says that's unbelievable. There's no way that could be true. Well, he had all this documentation and proved it, but it went all the way to the Supreme Court before he actually won. And as a result of that, the Congress came back and changed the law and set up this lesser of actual designated or fair rental value. And any excess, so in other words, whatever the lesser of those 3 figures is the maximum amount that you can exempt for federal and state income taxes, okay? If you don't spend all that was designated, or your fair rental value was a lesser figure, then you have to bring the excess, that last bullet, any excess housing must be added back to income for federal and Alabama state income tax purposes. So that's something you don't want to do, is come back at the end of the year when you're sitting down with your CPA and say, well, I've got $6,000 that I didn't spend, and now I've got to bring it back into income, and you didn't make any tax provision for that throughout the year. So you want to keep track of those numbers say, well, how do I come up with a fair rental value? The IRS doesn't give you an exact format, but it's recommended, and that's what I recommend to all of my ministerial clients, is to go to a real estate broker in your area and get something on their stationery that says, in our professional opinion, the fair rental value furnished of my residence is this much per month. And then you can add your actual utilities figure to that. Then you have that documented. If you move to another place, get another letter. If you want to get it updated every year or two, that's fine, based on the fair rental value and your property tax values and that kind of thing. But you need to have something in your files and the CPA that does your return or tax prepare that shows what that figure represents. Here's a list of some of the eligible expenses. I think I've got another list in there in a couple more slides. Mortgage payments, principal and interest, utilities, repairs, property taxes, all those things, as long as it doesn't exceed the fair rental value of your property. Ministers furnished to parsonage must pay self-employment tax on the fair rental value. We took over a client over in the panhandle of Florida about 6 or 8 years ago. He'd had a CPA firm in Dothan, Alabama prepare his return. And when I take over a client, I always want to look at their prior year return just to get a good history of what's going on. And I didn't see any evidence of a housing allowance anywhere, and he was living in a parsonage. Long story short, they had never taken that into consideration. And so I think the fair rental value was like $1,000 a month or something in that range. And so he had some additional taxes that were owed for that year and previous years. And the church was nice enough to step forward and assist him with that. But, all churches aren't able to or don't want to do that. And so you want to be aware of that situation if you have a parsonage. Housing allowance are also subject to self-employment taxes at 15.3%. Here's a sample designation. And again, anyone that would like a copy of this, they could just send me an email or call me, and I'd be glad to provide that for you. But it just gives the suggested IRS language as to how to set up your housing allowance and so forth. All right. And here's an estimate of the housing expenses that we talked about a little earlier. If you're buying a new home, the down payment on a new home is an eligible expense. So you may want to adjust your housing allowance for that year and increase it because you've got a down payment involved, and then reduce it for subsequent years. And all those other things, real estate taxes, property insurance, utilities, all those things are part of your eligible expenses, okay? W-2 versus 1099 NEC, non-employee compensation. W-2, again, as we mentioned, are for ordained ministers with any retirement contributions in Block 12, as Brother Lee just talked about. Then your housing allowance, optional in Block 14, not required to be on there. But if it's not on there, you need to get the church financial secretary to provide that on letterhead to know what that figure is. Okay? 1099 NEC is independent contractors that are paid over $600 by the church. Landscaping, church pianists, guest speakers, and so forth. Okay? No Social Security or Medicare taxes are withheld for ministerial employees. You can have what's called voluntary withholding. If the minister and the church both agree, the minister may get with his tax preparer, CPA, and say, hey, this is how much my total tax bill is going to be for the year. And he's paid once a month, so divide that figure by 12. And if the church agrees, you can say, here, church, take out 1/12 of my federal tax liability and send it in on my behalf. A lot of people like to do that in lieu of making quarterly estimates. A lot of people don't like, keeping up with when those are due, and from a cash flow standpoint, coming up with the funds at the due dates and so forth. If you're dealing with a 1099 NEC, you should file a W-9 by any independent contractor, any evangelist that comes to speak, anyone that you think might be, even if you don't end up paying them $600, go ahead and get that on file where you don't have to go back and track them down later. Okay? Accountable expense reimbursement plan. About 5 or 6 years ago, the IRS eliminated most, if not all, of the ministerial employee business expense deductions. Form 2106 that would flow to your Schedule A. They also increased the standard deduction, so I think the last time I saw, somewhere like 85 to 90% of taxpayers now can file the standard deduction because it's higher than itemizing for your medical, your mortgage interest, and that kind of thing. So since you've lost that deduction, this is even more reason, if you don't have a plan set up by the church to do so, as a minister, to cover your travel expenses, your business mileage, conference expenses, travel, hotel. If you have a guest speaker come in, you take them to lunch, those kind of things. You have this accountable expense reimbursement plan set up and approved by the church, and then the minister turns in expenses on a regular basis, and they are reimbursed for that. That's a good thing. The other good thing is, since they've lost the deductibility of it, if they don't do that, they're just lost. All those business miles they can't deduct anymore. So it comes in handy. It doesn't cost the church anything. It could potentially save a lot of taxes for those ministers with those expenses, okay? There's a list of the kind of things that are included. Of course, maintain proper records and submit as required. And I think I added a sample plan. The font's pretty small, but again, if you need a copy of this PowerPoint, just send me an email. I'll be glad to send it to you. This is just sample language of establishing an accountable expense reimbursement plan for your church. Okay? There's just a sample report that the minister might submit. His mileage, again for 2023, the mileage is 65.5 cents a mile. I never would have thought I would have seen the IRS approve of 65.5 cents per mile for business mileage for ministry, but that's what it currently is for 2023. So this is just an example of showing that mileage, the meals, the hotel, and the Sunday school materials. This is a miscellaneous expense, and whatever that total is, I'm covering it up $296. So a form similar to that would be submitted. The financial secretary would have it approved and then write a check to the minister for that $296. That's not income to him, but since he can't deduct those miles on his return, he's getting reimbursed for it, so it's a sort of a win-win situation, okay? 22, so I'm gonna skip through this. It's just talking about some control procedures. This is more from the church standpoint, but again, if you want to get a copy of this, I'd be glad to provide it for you, but in the interest of time, a couple of things. We may have some bivocational pastors that are watching either in person or online this morning. If you have a secular job and you're the pastor of the church, again, that's considered being bivocational. You receive a W-2 from your employee and a W-2 from the church. Good question. Can a bivocational pastor claim a housing allowance? Yes, he can. It can be up to 100% of his ministerial income. If he properly documents and proves it's approved in the business meeting, you have the lesser or that we talked about, the actual expenses, the designated amount, and the fair rental value. I'm going to be preparing to return this year another new client we have, and that's his situation. 100% of the pay that he has made by the church is going to be considered housing. The trouble is they haven't gotten it approved yet, because I just found that out last week. I thought they were already, it's a church plant, and you know, they basically said we're a church and started having services, but some of this administration stuff they sort of forgot to take care of, and now we're involved and glad to help them. So for 2023 and going forward, he will have a much better situation tax-wise. But all those payments he made during 2022, or he received in 2022, that's going to be compensation because there was no approved housing allowance by the church at that point. So he wasn't too happy when I told him that, but that's the way it has to go, okay? Self-employment taxes, which are federal taxes, 15.3%, and we talk about SECA tax, will be due for his Block 1 plus any designated housing allowance, plus the fair rental value of any parsonage, church parsons. And a lot of times bivocational pastors overlook that. I see that more often than I don't, unfortunately. So if you're bivocational, be aware of it. And here's some ways to help bivocational pastors in honoring the Lord with their stewardship and so forth. Adopt that plan we talked about, the accountable expense reimbursement plan. Provide benefits to the pastor and his family, such as health insurance, term life, disability, and other benefits that Brother Lee talked about, and he does a lot in the other State Board of Mission conferences. And Guidestone provides most, if not all, of those. And help with retirement through Guidestone or other plans. And there's some other benefit programs. I presume they're still available for church assistant programs. And then the housing allowance is another consideration to make sure you take advantage of and keep those records. Because as most of you may have seen, I don't think they've actually hired all 87,000 new agents yet, but they're in the process of it. I did read the other day there's at least 5,000 that's already on the phones ready to hear from us when we call with questions this tax season. But I wouldn't be surprised if the audit percentages go up over the next year or two, if in fact they do end up hiring 87,000 new IRS agents. They've got to keep them busy doing something. And that's just an example of the calculation for the housing allowance. Here's just a couple of little brief developments as far as 2022 is concerned. No real changes in the ministerial housing allowance. I think there was a court case in 19 is the last one I saw. Is that right, Lee? It was a unanimous Federal Court of Appeals decision that upheld the constitutionality, legality of the housing allowance. There have been several efforts over the past few years to repeal that, and I would not be surprised if that were to continue, because that's something that they can take away from Christian ministers that, of course, would be a real difficult detriment to them tax-wise. So don't be surprised if that continues. But as of now, it's still proper. The same thing with the revocation of Social Security exemption. I was talking to Dr. Crane a little earlier. I've got a student pastor who we started working with last year, and he called me last week asking me about providing some information about the exemption for Social Security, filing Form 4361. You have to do that by the due date of the tax return for the second year that you earn at least $400 in ministry income. And he is seriously considering opting out of Social Security. And I don't know how many of you have had that experience. I try to be objective, but I'm giving him every reason for him to be aware of why he may not want to consider doing that, because there are potential long-range implications if you don't, and you have to make your own provisions for Social Security, or if you're disabled, get hit by a truck and end up in the hospital for 6 months where you can't file Social Security disability if you're opted out of the program. So the mileage rates I mentioned, those are for 2022, and medical rate's 18 cents a mile, the charitable contribution rate's 14 cents, and changed mid-year in 22, and now it's changed again, as I said, at 65.5 cents. The standard deduction for 2022, as you're sitting down, if you're going to prepare your own returns, those are the new standard deductions, $25,900 for married filing jointly, and the personal exemptions are no longer available, but they increased the standard deduction in their minds, so to take care of cover that. And then if you're over 65 or legally blind, you get an additional deduction there. Again, if you're using software, TurboTax or whatever other software you might be using, it should take care of that for you. Federal tax rates are 10 to 37%, depending on where you fall in the taxable income range. For 2022, the gift tax exclusion was $16,000. So if you gave a grandchild $14,000, you're not required to file a gift tax return. If you gave them $20,000, you are. You won't owe any gift tax because the annual exclusion is 2 or 3 million. I forgot exactly what the figure is, but you still would have to file the Form 709. But it's a good way to pass money along to your children or your grandchildren without any taxable benefits to either you or the person that receives it. You should update your W-4 federal withholding form and your A-4 Alabama withholding forms, even if there's no change. I mean, I suggest filling out one annually and having it included in your personnel file, and let your financial secretary be aware that it would be a good idea to update those on an annual basis. Okay, the child tax credit last year, if you remember, there were advanced child tax credits, and I think the total went up to $3,600. For 2022, it reverted back to the $2,000. So a lot of taxpayers with families are going to have either a lower refund than the previous year, or they may owe this year, because what was $3,600 per child is going to be $2,000 per child for 2022. So be aware of that. No economic stimulus payments were made. They're eliminating what they call non-itemizer deduction. Even if you filed a standard deduction in the 2021 year, you could still take, if you filed married jointly, up to $600 as a non-itemized charitable contribution deduction. They've eliminated that, so that's no longer there. I just always point out the home office deductions are a red flag. The IRS doesn't like that, and if you are going to look at utilizing a home office deduction, you just want to make sure, as in every case, follow the guidelines and regulations, but make sure you know exactly what's required. The room, for example, has to be for the exclusive use. The dining room table is not a home office for the exclusive use of a minister. I love you guys and ladies, but that's not the case. So just keep that in mind, okay? Does the church need an audit? We don't have time to go into that in great detail either, but basically there's 4 types of services. An audit that can cost from $8,000 to $12,000 for a church, maybe even more. A review, which is not as detailed, but is really not worth the paper it's printed on, to be honest with you. Probably $5,000 to $8,000. A compilation is just a CPA firm taking the financial statements of your church and putting them in their format. I mean, that's not very difficult to do. If you got a couple of accounts out of balance or misclassified, CPA firm will change them, but they'll charge you $4,000 or $5,000 or $6,000 for it. What good does that do you? It does the firm well because they made $6,000, but otherwise it doesn't do much for the church. The agreed upon procedures is the one that I recommend, unless you absolutely are required to have a financial statement audit based on your Constitution and bylaws, or based upon a loan covenant. If you've got a loan with a bank and they require an outside external firm to come in and audit your records, this agreed upon procedures basically says, okay, we're going to do these 3 or 4 things. We're going to look at your payroll. We're going to look at your cash disbursement policy, whatever. And those 3 things, or however many, would be what we would tune in on. And we're not doing a lot of checklists and doing a lot of work and sending letters to your attorneys and all that kind of thing, which is required when you have a financial statement audit. And again, most churches can't afford $12,000 a year to pay an outside firm to do an audit. And so this is an alternative. It still will not guarantee if there's any embezzlement or fraud going on, but most cases you have a greater chance of catching something when you're doing things in a more detailed basis versus just doing an audit where you look at 60 checks for the whole year. Well, I mean, if you write 60 checks a day, if you're looking at 60 for the whole year, as you well know, the chances of finding that needle in a haystack are going to be pretty tough. But if you said, hey, we've got some concerns for whatever reason, let's look at, 50% of the checks for this 3-month period or whatever. If you had someone that was making $15 an hour and all of a sudden they took a round-the-world tour, and wonder where they got that money or whatever. So, I mean, you may have an occasion, a new pastor may come in and say, hey, I want a clean slate, and they may want to look at something in a more detailed basis. Church accounting tips: neither the pastor or the church treasurer should count the offering. That's probably a good idea. I have a good friend of mine who is an intentional interim right now in a church in South Georgia, and he met last night with a founding member of their church who is an elder, not eligible to be a deacon because of a previous marriage situation, but he's an elder, and he's the founding member of that church. And he's been there, as we were talking about earlier, you guys were talking about seminary, the ark may have dropped you off in New Orleans. Well, sounds like from talking to my pastor friend that this gentleman may think he's been there since Noah built the ark. He takes up the offerings every week. He goes and makes the bank deposit himself every week. He approves all the disbursements himself. One required signature on the checks. Guess whose required signature it is? It's his. Wow. And my buddy who's intentional interim, I don't think he gets paid enough to be an intentional interim to do this, but he saw fit to go meet with this gentleman last night, and they had a prayer time for my friend to try to convince him that he may want to segregate those duties to some extent, because not that anything's going on. They don't necessarily suspect anything's going on, but to protect the integrity of that gentleman. If he's the only one, going to the store, buying the vegetables, cutting the vegetables, cooking the vegetables, preparing the meal, if somebody gets food poisoning, guess who they're going to blame? They're going to blame him. Well, I would want to have some help in there myself, but apparently this gentleman doesn't. I checked with him this morning before we came over, and it didn't go real well. So, not surprised, but anyway. That's right. Exactly. Those are some other tips. Never sign a blank check. I had somebody call the other day. Our church treasurer's going out of town for a week to go visit the grandkids, and can we just get him to sign 10 blank checks and put them over here in the drawer? You can, but I wouldn't recommend it. Because what if somebody breaks in and steals those checks? Oh, nobody steals anything around here. Yeah. Hang on. We've got 5 minutes. 5 minutes. Church embezzlement examples. Now, this again is not specifically ministerial tax topic, but it's something that's important enough that I always try to bring in the course of the sessions to let folks be aware of. And again, won't go into details, but the first one was at the church that I used to be a member of. And back in the old days, they had a gentleman that stayed in the office, collected all the Sunday school records, in the little metal boxes, and he was able to figure out who gave cash tithes and offerings on Sunday morning. And so what he was doing was taking those envelopes out, taking the money out, putting the envelope in one pocket, and putting the money in the other pocket. And he was smart enough to keep the envelopes. At least he wasn't throwing them in the trash bucket for somebody to catch. But anyway, and there was a time that church was without a pastor and without an executive pastor. And the financial secretary called me one day and said, Don, what do you think about, we normally send contribution statements out once a year. So what do you think, under the circumstances of our transition and so forth, do you think it might be a good idea to send out quarterly statements for this most recent quarter? I said, I think that'd be a great idea. And so she did that, and they got mailed like on a Friday. And by Tuesday morning, she called me and said, Don, I've already got 15 phone calls already about the contribution statements. So, well, gee, I was no longer a member of the church. We'd been a member for many years, but she was just using me as a sounding board. And she said, every one of these people are saying that the numbers on our quarterly statements are way, way, way too low. And we have done a little research, and all 15 of the phone calls thus far are people, I don't know why you would give large sums of money in cash, but they were. They were all making their tithes and offerings in cash. And all 15 of them, the figures were either way off or non-existent. Well, long story short, they set up through legal appropriations and so forth, they set up a hidden camera, and they caught the guy. And he admitted his wife was going through cancer treatments, and he needed the money for medical bills. So, well, how much money do you think you may have stolen? So I don't have any idea. I've been doing it about 3 months, probably 70 or 80,000. I mean, can you? I can't even imagine. I wouldn't want to stand next to that guy for fear he'd get struck by lightning or something, So anyway, that's one that I know about for sure. Florida deacon, he used to come in on Monday and say he was buying the coins. He was a coin collector. And so he'd buy all the coins, give them $300 or $400 check, but guess what? On his contributions, he included that $400 as a contribution to the church, even though all he was doing was just buying the coinage. Well, as the old saying goes, he ended up with 3 hots and a cot down in the federal prison in Florida because he was convicted of tax fraud. Financial secretary writing checks to herself. Again, a lot of churches say, well, we don't have anybody else. We've only got one person that does all this. So, you have to be creative and take a look at whatever alternatives you can have to have volunteers come forward and help. But do what you can to segregate those duties where you don't have one person handling the funds like that. Like I talked about this gentleman that my buddy met with last night. Credit cards for personal use. Oh my goodness. I mean, I see articles once a week through Baptist Press almost, where churches found out that financial secretaries were setting up credit card accounts and charging personal items and trips to Las Vegas and whatever, using God's money. Unauthorized church loans to the school board. That's another personal one. We won't have time to go into that. If you want to hear that story, I'll tell you afterwards. And here's 2 or 3 that I've just seen in the last 3 or 4 months. Church in North Carolina, $156,000 over an 8-year period. A Southern Baptist church that I know the pastor who was at that church, $209,000 in a 2-year period. A non-denominational church in Texas, $450,000 in 5 years. Now, I would think most of your budgets, I'm not being critical, but I would think if you missed $450,000 over a 5-year period, you'd know about it, wouldn't you? I would hope so. But some of these churches apparently didn't. So have policies and procedures, segregate your duties, and be aware of those kind of things for future. Okay? Now I think we're going to let folks know that it's Q&A time. Is that right? Okay? It's 2 minutes after, so Lee, we did great.
Two quick questions.